What's up, money makers? Welcome to the belated episode 2 of how to invest money or how to invest in stocks. Pretty much just this one's just going to be like an extended introduction. Now we're actually going to get into some things of like investing, but first I want to talk about how or why this took so long. Really, the first, I think it was like 2 weeks ago, I had like a health scare. And it was kind of crazy because, when it happened, it looked like I was diagnosed as having like some mild form of seizure incorrectly, which we found out later once having a trip to a neurologist. But that happened, and then so that was like a couple weeks ago, and then last week was my birthday, so I'm not gonna film on my birthday, sorry guys. But yeah, so now we're here, and I'm glad to be back in front of the camera. But first of all, to start off with, I'm gonna start off with why invest. Owning stocks is like owning a piece of a company. So in doing that, what comes along with it is not only do you get the profits that come with the company, but you also get own a share in the assets of the company. So you can earn money from owning stocks in one of two ways. The first one is dividends. So dividends is the company's way of returning money back to the shareholders. So this comes as a percentage of how much of the company you own. So that is something that I can show you how to do later on, how to figure out your dividend yield and etc. But that's a little further down the line. And the second way is through the company's value actually growing and actually multiplying the amount your ownership stake in the company. So as the value of the company grows, your stock will grow too, but the difference between what you paid and what it's worth will be the profit you earn if you in turn decide to sell your stake in the company. So those are the two main ways that you earn money through stock. The next great thing about like why you'd want to invest in stocks is you have the opportunity to earn a lot more on your money than you do in savings. So when you save into your savings account, you're probably earning like 1% or maybe like 2%. If you're lucky, you're earning like 2%. But with stocks, on average, the return on the market has been about 10%. And that 10% is huge considering that it is compounded. And what makes it, and what puts you at that percentage is if you, or even higher, is if you have the know-how of how to choose great companies, which is what I'm gonna help you guys with. So a big thing about investing in stocks is you wanna have financial goals. And what I mean by that is investing in stocks is not, I'm not teaching a quick get rich quick scheme. I don't know why that was so hard to say. A get rich quick scheme. So what I'm teaching is something, or like advising is something that is going to grow over the long term. So I know people are thinking, 10% doesn't sound that much, but the interest compounds. The 10% on that initial investment just keeps growing and growing. I mean, the interest you keep getting interest on top of interest, and that's what the beauty of compounding is. It just continues to grow on whatever growth you have. And just for those of you who like still don't understand like where I'm going, what if I told you that you could put in say $100 and with 10% if you're getting that 10% and then it keeps compounding on top of your initial, say, $100 investment, and after 40 years, you've got 50 grand just sitting there from minimal effort. You've had to do little to no work, and you've got $50,000 in return. That sounds unreal, but that's just the beauty of compound interest. If you do it right, it's gonna work so well for you. The key thing about compound interest is you gotta remember to give it time. If you are impatient and you don't let things play out, you won't see the returns that you're hoping to see. So for all you guys who are impatient, you better settle down, because you need to give it time. So what I preach is, if you want to make those big earnings in stocks, you need to invest now. The more time you give it, the more time you have to work the magic of compound interest. So the younger you are, the better it is that you invest. And I know a lot of people are saying that, oh, you should invest like $2,000 or $1,000, but really, if you can invest, you should invest just as much as you can without affecting your budget, and then you will just see that grow. If you just keep adding to it as well, it'll just grow and grow and grow so much quicker. You don't have to even invest like $100. Like, even if you could only invest, say, $20, and you just keep adding to that $20 every month or week or whatever is affordable for you, you're gonna see just massive gains if you're picking the right stocks. I mean, that said, you are set to run into winners and you're set to run into losers. That's part of investing. But the thing is, knowing when to stick with your winners and when to stick with your losers. If you truly believe in the loser company that's losing at the time, and you're really invested in them, well, besides financially, but you really support their goal, all their books look right, and you stick with them, they could come out to be a massive winner, and you could be a massive winner too. So remember, guys, to reap from compounding interest, start early. I would say start right now, but you guys don't really know anything about investing yet, so wait till the end of the series, then start. Alright guys, that's it for the video today. I'm gonna check out. Make sure you tune in, subscribe, hit that like button down below, and make sure you also, if you're new to the channel, hit the bell notification so you can get all the notifications, so you can keep up with all the coming content. Whatever. I'm out.